Hello there. The presentation you're about to see was first presented live at the Bitcoin Center, New York City on July the 17th, 2014. Because of circumstances arising since then, we have decided to bring the presentation into the studio to record it for distribution. I think you'll understand why when I mention the fact that the subject matter, Bitcoin, has now been the focus of New York State's Financial Division regulation. So without further ado, here is the original PowerPoint, coining it a trading perspective on Bitcoin. I should say before we get started, this presentation hasn't been changed from its original format, and it does assume a working knowledge of Bitcoin in terms of fundamental nature of the digital currency. So that said, I want to get straight into the presentation by looking at the contents slide and going through quickly what we're going to cover in this presentation. Okay, as you can see, we're going to cover the key subject matters being an overview of the market, a look at who the market players are and what moves the market. Then we're going to go on to the selection of an exchange, creating your trading plan, putting together a trading model, and looking also at entry and exit points. Then we're going to move on to position management, account security, Bitcoin arbitrage, education, and we're going to wrap it up with special areas of concern. So that said, let's go straight into the subject matter and let's look at Bitcoin as a trading vehicle. Let's delve into the market and see who's out there, who the players are, and what we need to know about them. But before we get started on that, I just want to take a second to have all the viewers, wherever you are, whoever you are, to read what is a risk disclosure statement, which is boilerplate for a presentation of this nature, and just makes it clear that we're not specifically providing investment advice. Okay, that was fun. So let's get started on market participants. Let's see who's trading Bitcoin, who the players are, what they're about, and let's find out where you would fit into that general dimension. Okay, so at any given moment, the market participants, as in the buyers and sellers of Bitcoin, are made up of the following. They're either individuals or groups, and going down the list, they're going to be either retail consumers, they will be merchants, they will be speculators, as most of the viewers of this presentation will come under that category, and there'll be some hoarders, ladies and gentlemen, which are people that are simply buying the digital currency with just socking it away and hoping that it becomes their golden nest egg for a rainy day. Additionally, and because of events that are taking place over the last year to 18 months, there is also a lot of institutional activity in this particular asset class, and it is an asset class. And last but not least, we have an X factor which is very unique to this particular currency, which is the insider holdings. Now, insiders here doesn't mean management of the company, because there is no management of company per se. It's an open source payment rail / digital currency. Insiders here mean people that hold an indeterminable amount of Bitcoin. For example, the creator, Satoshi Nakamoto, the Winklevoss twins, Ross Ulbricht, etc., etc. Now, it's important if you're going to trade these markets, and particularly these currencies, these new alt currencies or digital currencies, for want of a better word, to know who these players are, what their motivation is, why they're there, what they can be expected to do under certain circumstances, and have some predictable model of their behaviors. So that takes care of meet the market players. So let's go on to the next part of the presentation, which is why does the market move up and down? Now, Bitcoin's been around since 2009. It's in its infancy as far as any instrument is concerned. It's relatively new, but it's had its ups and downs, to say the least. I think on the low side it's traded inside $1, but on the high side I think we've seen $1,200 per coin. Now, you don't need me to tell you that's some degree of volatility, and most of the money that would be in Bitcoin now under different circumstances is shying away because of the spikes and the ups and downs in the price. So why is it behaving this way? What moves the market? Now, as you can see from the slide here, I've tried to put together a kind of checklist or rational list of factors that will account for its swings and ups and downs, and here they are. I mean, you pick something that you like. But long story short, we've got aggressive buying, aggressive selling, perception of negative news, changes in supply, that's M1, that's how many bitcoins are in circulation. We've got transaction volume, the list goes on as you can see from the slide, but understand something. This is not an exhaustive list, and as a trader, you should get in the habit of looking at this list and trying to figure out what's current, what's not affecting the market, and really getting some perspective, which is the name of this presentation, on why things are happening the way they are. So that's a quick idea of what moves the market and why. So I want to move on to the next slide, if I may. Now, this is unique to digital currencies in as much as you can't be in the market because of its nature unless you trade through a digital exchange. That means you can't call your broker and ask him to buy you some Bitcoin. It means you can't find them or enter the market in traditional ways that one would with any other run-of-the-mill asset class. You have to trade on an electronic exchange, and simply put, at the time of this presentation, the caveat is be very careful as to how you select an exchange, what their benefits are, and more importantly, the secure nature of what they've got going for them as far as protecting your Bitcoin wallet. Now, as you can see from the slide which you're looking at, there are a few exchanges to choose from, but the key factors are, and it should go without saying, but I'll read them off anyway, is competitive pricing. I mean, you've got to look around and get the best bargain you can for your buck. The fee structure is big time. I mean, some of these exchanges are very illiquid, they don't do much business, so in order to make ends meet, they have to charge exorbitant fees to those clients that are on there. Also, and this is going to be covered in position management, we've got to look at the exchanges that have access to instruments and tools that help you as an investor. For example, it's a well-known kept secret, and it's not known by a lot of Bitcoin and alt currency traders, that you can margin your positions. There is leverage out there, and some platforms offer 2.5 times as we speak, depending on market conditions. So that's something to look out for. Also, order book transparency. This is a unique market in as much as you can look behind the last trade or last execution and take a look at what's out there in terms of buyers and sellers that want to transact at various levels. So you can take a peek at who wants to do what down the road. That comes under the heading of order book transparency, and it's very key in your, should be key in your trading philosophy and toolkit. Lastly, and this is a very well-kept secret, there is a yield, for want of a better word, on Bitcoin and other alt currencies, depending on which platform you employ. What that means, simply put, is to gain liquidity for people that want to buy on margin, you as a Bitcoin owner, should you not have any need to liquidate your position or you're in there long-term as a hoarder, you can actually lend your position to the platform for the platform to create liquidity for someone on the other side that wants to buy on margin. So that's another big tool, and let's face it, if you have a big position, why not have it pay some interest in some way, shape or form while you're waiting for the currency to trade where you want it to. The last category here, but a very important one, is security, but I'm going to defer to a later slide for that, and we'll come back to security when we get to it. Okay, I don't know who's watching this, but if you've seen anything of me over the years, you'll know I'm a trader, and you'll know that I am very, very devout when it comes to creating your trading plan. It is impossible to succeed in any way, shape or form. In fact, it is a recipe for disaster to go out there and try to trade any financial market, least of all one as volatile as the new frontier digital currency market, without a plan. I have given you in the next slide some bullet points or some guidelines as to what should be included in your trading plan. This is not, again, all-inclusive, but I think it will give you a sound basis. You've got to ask yourself, what am I good at? What skills do I play to? How can I trade in such a way as to augment, my skill set? That's why we've got skill assessment up there. Mental preparation. Guys, if you're going out to play, if you're going to get in the game, you've got to be ready and you've got to be up for it. So you've got to be prepared to trade and be mentally ready for the ups and downs that certainly will come your way. Set goals goes without saying, but you should do it anyway. Why would you expect to get anywhere if you don't have a game plan and if you're not assessing your progress on a day-to-day basis? I think practicing disciplined money management is something that you're born with. I think trading is a science, and it's handed down to you in good financial habits, perhaps by your parents, maybe by your upbringing and your education, but certainly you need it on board if you're trading to any large extent. Trade preparation means you've got to do your homework and be ready to get the trade on when you want it, how you want it, and not second guess anything. Too many people blow up because they change their mind in the middle of the race. Exit and entry rules are kind of signal generation aspects, but it needs to be a part of your plan so that you don't, again, detract or change the game plan in the middle of the plan. That's a recipe for disaster. Keeping excellent records is kind of self-explanatory, but you can't see how well you're doing unless you document what you've been doing and when you've done it and how. This is how you improve, because you eliminate the mistakes and you identify and repeat what's working for you. So that comes under track and review performance. So this is, once again, ladies and gentlemen, I don't want to make this sound like this is a catch-all trading book. I mean, there are many been written that have gone into hundreds of pages, but these are fundamentals that you have to have in place if you're going to trade the highly volatile new, and it is a currency, of Bitcoin and its subsidiary altcoins. So that's the trading plan covered. Let's take a look at the next slide, which is your trading model. Now this one confuses a lot of traders, but I'll kind of make it simple for you. A trading model says, under these circumstances, this is likely to happen. It's like a spreadsheet. If 10 guys eat 5 pies, they've eaten 50 pies, okay? So that's your model. If you suddenly think that there's going to be another 3 guys in the equation, then your model should tell you that there's going to be another 15 pies eaten. So that's a simple analogy, but a trading model means if something changes, how is it likely to change the outcome? In other words, if the price of gasoline goes up, I want to put it in my trading model, because that should tell me that Exxon and the oil companies or the power companies are probably going to move up in price. So I've made that simple because it is fundamentally simple, but as you can see from the slide, in the top right hand corner we've got a kind of extract from the spreadsheet. That's what you have to have if you're going to model price and you're going to realistically project where something is going to go, and if you want to change your theory as circumstance around it changes. So I encourage you to research this. I've left you a very basic formula towards the end of this particular slide, but this create your own, create your own model that works for you and that is based on your assumptions, because that's all they'll ever be, and one that you'll change as circumstance dictates. So that's a part, and a very big part, of your trading arsenal, or should be. So we're getting close to halfway through here, so I want to just look real quickly at slide number 5 or 6, which is entry and exit points. Now this is fundamental to all trading. Now the name of this presentation is Coining It, and it refers to Bitcoin, but what we see here is something that you have to, this is something you have to research and put in place to trade anything. Where do I go in? Where do I go in? Where do I go out? How do I determine what exit to use? What's a buy signal? What are my alerts? Okay, they call them alerts, but long story short, Bitcoin's rather unique because most of the instruments that you'll hear about when it comes to the expression trading will be something like Forex, stock market, futures, commodities, options, and all these asset classes have something that Bitcoin doesn't yet, and it's, well, 2 things actually. They don't have mainstream acceptance for starters, but they certainly don't have depth and breadth and liquidity. So whilst we can use technical indicators for most trading, where has this been? When does the selling start? When does it stop? Where's the support? Where's the resistance? In Bitcoin's case, it's driven by other things. Remember the slide I showed you about what moves the market? It wasn't technical analysis. It was bad press, merchant adoption, regulatory issues, public perception. In other words, it keys off of news and external stimuli, okay? It's the nature of the instrument. It's kind of ephemeral and it's mercurial. So the things that move a regular market, price earnings, comparison to other markets, yield comparisons, they can't affect this because it's kind of in a universe by itself. So my advice here, and it's general advice once again, use technical indicators. Obviously, if something's been to 1200 and it's sold off to 600, which is where it is at the time of this broadcast, I believe it's 625, that means it's been there before. It could go there again. It means people that were long 7, 8, 900 have been through a bull market to the high 11, 1200s. So it's conceivable it will go back there. However, fundamentally, have things changed since then? Has it fallen off a cliff in terms of public opinion? Do we think that the government have decided that it's not going to work for the US? What is China going to do? Is the IRS going to redefine it? Currently in the States, they call it property. Are they suddenly going to do an about face and say, given the regulatory changes that have been made, we now are going to call this an asset class in its own right? We don't know. But these are things that you have to put in your model so you can key or generate entry and exit points as you see fit. Okay, this is working out very well. I want to move on to the next slide. This is interesting. Well, it's not a big factor now in Bitcoin because, quite frankly, there's not enough position out there for people to need major management tools. But let's look at something real quickly. By position management, I mean this. You already own something. You are exposed to it. Let's say it's a stock. If you own 1,000 shares of IBM, you're exposed to that in a big way. You might own it for lots of good reasons, but you don't want all your eggs in one basket, but you don't want to sell IBM. So you have options available to you, and the marketplace, being the stock and equity markets, pans them to you. It says you can hedge this by, if you like, general S&P futures on the short side to hedge against a market crash, or you can buy some puts. You can take the bear side of the long position you have to match your exposure, which is a form of insurance. But in the alt currency markets, in its infancy, there isn't the liquidity and there isn't the peripheral market to cover necessarily what could be big exposure. However, having said that, there is a small potential to hedge, for want of a better word, and I've given you on this slide the options that are out there as we speak. As recently as last week, and we're in July 2014, I came across a company that are out there or putting together an alt option exchange, which means there'll be derivatives on all the alt currencies, and I mean they'll find a way to key off the prices. They'll drive some liquidity into the market. Whether it will work or whether it will be effective, I don't know, but it is an option. But once again, we've got that our friend margin trading in there, which means, hey guys, you can buy more Bitcoin than you've got in the bank because there are people on the swap side that will lend you their Bitcoin through an exchange. Okay, one thing that's very important, and it should be under, well, it's kind of under position management, but it should have a category by itself, which is risk control, is the stop limit order. Now, this is a unique market, okay? This is not a market that closes. It's a digital market. It's open as long as your phone is on, and or your PC, your Android, your laptop, whatever device you're using. It's on as long as you're on or unable to get an internet connection. That means you're exposed to whiplashes in the market. It means you could go to bed with a profitable position and wake up losing money. So none of us want that, and we want to provide against it. So just as the stock markets and most other liquid traditional markets provide you with stop loss or downside protection, there are platforms that have the same ability, and I feel this is going to drive the institutions and the serious money into the, to start with in a small way, but they're going to take it seriously because they can cap their exposure, they can manage their portfolio. So look out for more products coming down the pipe as far as this particular section is concerned. So we're getting close to the end here. So let's look at the last slide, or penultimate slide. I'm going to defer to superior judgment on this, as much as I hate to. This is a very unique product. It runs on blockchains and account securities and public keys and private keys and miners and a lot of technical factors and components that I truly don't understand, and I'm not going to. Neither is most of the viewers out there. But having said that, common sense dictates that you do a little homework. It's your money after all, and you exercise due diligence in protecting your accounts in as much as you can. I want to say real quickly before we get even into drilling down this list, this is just an overview. Please, whoever you are, whatever you're doing out there, if you're going to get in these markets, can you make sure that you do a little more than this when it comes to protecting or researching the platforms you're involved with, your account security, and last but not least, I should have put it in there, but I didn't, seek professional guidance, because there is no regulatory comeback. There's no one to complain to if your private key goes amiss. There's no recourse. It's just that simple. In the slide I put, and I quote, there is no way of law enforcement. It's that simple. So long story short, I mean, these go without saying, but I'll say them anyway. Secure your computer, create a secure identity, secure your wallet, and back up all the information or files on a regular basis. In other words, exercising disaster recovery as if you were a business, because you are. Trading is your business, so act like it is. Let's go on to slide 8 or 9. One of my favorites. Okay. Arbitrage is a beautiful thing. It's what keeps markets from trading all over the place, and it works simply like this. I've given you the definition, but I'll just make it simple for you. If there are two things being sold in separate markets at different prices, someone, and they're called arbitrators, or someone involved in arbitrage, will come in and buy object A from this guy and sell it to this guy and make the difference. Now that is a beautiful thing, not just because the trader will make money, but in the course of doing so, he will actually tighten the spread in the market and make things more level. If he does that a great deal of times, those two prices will converge. It's market forces. So arbitrage is only out there, and you won't find it on any major stock markets or financial markets anymore, because computers every nanosecond are looking for percentages of a penny point. But in the less developed markets, in the burgeoning markets, in the markets that are just coming of age, we're going to see it. And also, bear in mind, the people that are setting up these platforms, and they will be regulated very soon, are really get a price at whatever level they see fit. So they're not doing a great deal of research, and you can step in and profit between price differentials if you can match order books. I've made the references in the slide. I don't want to dwell on it too much, but there are some decent exchanges that, as we speak, that will show you open orders on both sides of the market. If you can API that information, compare it to relatively similar exchanges, you will see the opportunity to buy and sell and make a riskless profit. So look into that, and look into it soon, because as the markets develops, that will, by definition, cease to exist. Okay. So last slide. This is a 5-year-old product. I'm going to say product because it is a financial product. But then again, I think digital currency is actually an asset class in itself. I think it bears no relation to any other asset class, so consequently, it should be given a new class by itself. That said, there's a lot of people that don't know much about it. I took a look at this a year ago, and I did a little research, hence me presenting to you today. And I'll be honest with you, I'd say 70–80% of the brokerage community, and I mean, by brokerage, I don't just mean stockbrokers, I mean financial services, commodities brokers, real estate guys, banking, investment banking, pick a profession. They've never heard of this. Okay, so I think they're asleep at the switch. I think they need to stay current. And I'm going to explain at the end of this presentation why I did this again, as opposed to, I did a live presentation on July the 17th, but I decided to bring it into the studio for a very good reason, which I'll explain to you once we've got past the final points. Okay, getting back to education. Guys, this goes without saying. It should apply to any endeavor you take part in. Do your homework. Why would you expect to be successful in anything if you don't figure out what goes where, how it works, best plan of action, get a strategy, find powerful friends, make strategic plans? This is called educating yourself, being the best you can in your sector. It doesn't, you pick a division, it applies, but this is unique because the learning curve is tremendous, meaning it's a 5-year-old asset class that's a frontier currency. Those that master it or get used to it or find a niche or identify a opportunity are going to be the ones that are smiling if this works out. And there are those that have said it won't, but we're 5 years in and it's still very durably on the map. Okay, we are really getting close to my closing slide, which I'm hoping is going to be in front of you now. I could write a book, and I've done a few ebooks, about the differences between Bitcoin, and we're using that, when I say Bitcoin, in this context, you can throw in all the alt currencies in there, Litecoin, Feathercoin, Dogecoin, etc. But Bitcoin's the primary vehicle, so I'll refer to that most of the time. I could write a book, a seminar, and go on tour lecturing about nothing but the differences between Bitcoin and traditional investment vehicles. But I decided not to do that. I've decided that to look at it this way. If a client came into me and said, Aidan, if you had a couple of things you'd want me to be aware of in trading Bitcoin compared to what I'm doing already, which is options, futures, commodities, whatever it would be, what would they be? And I'd give him these two. There are more, but you know, in the interest of brevity, here are my favorites. Bitcoin is an online being. It is not tangible. You can't put it in your pocket. You can't throw it up in the air. You can't burn it. It doesn't exist in the three-dimensional sense of the word. That's not the end of the world because it's a payment railways and that's the nature of it. But it does make something rather important. You can't trade it unless you're online. That means if you don't have an internet connection or a device that's going to pick up your platform, you are not going to be able to move in, out, up, down, or any which way in the marketplace. So this is my kind of disaster recovery tip, but it's a good one. If you're going to trade in these markets, you've got to have a backup device. You've got to have your Android, your smartphone, your BlackBerry, your iPhone, and maybe a Google Pad or some kind of other internet device, which means if you lose internet connection, you're still able to trade. That's a kind of common sense, but no one really looks at it, and I thought about it, given the fact that these are 24-hour markets, just as the internet is 24 hours. My second area of concern is odd, and I'm going to close with it, kind of. Bitcoin's not money like there is other money. It's not the Japanese yen, it's not the euro, it's not the British pound. And the reason it's not is it comes from a different place. Bitcoin was created in 2009, and it came about as a result of technology meeting disparity with the financial system as it was then. This is post the major credit crisis, 2008, Lehman Brothers going down the tubes, people losing their homes, Wall Street dissatisfaction, lack of investor confidence. So the idea of a currency that was decentralized and wasn't subject to government intervention or any of the other or the other perceived abuses was received favorably. It's now 5 years on, and the currency is still out there, and it's still picking up momentum. But there is something I warn you about, and that's if you're involved in trading Bitcoin or owning it or trying to benefit or partake in its success or adoption, it's akin to the stock market expression, don't get married to the stock. A lot of people I've met have said, yeah, Bitcoin's great, I love it. I mean, I looked at it 4 years ago, I own it, I'll never sell it. That's crazy. If you're trading something, you're trading it for value. You're not trading it because you love the idea. You do not get married to Bitcoin any more than you get married to a stock. That means that you are no longer trading it, you're a supporter, and you have basically gone native. So that's something I'd advise you to be very aware of when considering the reasons that you might own something when the only reason you can think of that you own it is because you like the idea of it. Okay, that's kind of being a disciple, and it's bad trading philosophy. So, we should have one slide left. This is my favorite slide because my picture's on it, and it's a summation slide, okay? I've got to read this because I've probably covered this before. There's no doubt in my mind. In fact, I'm not going to read the slide. I'm just going to talk about what's going on right now, mid-July 2014. And I will get to the reason that I decided to televise this presentation rather than just having it, just leaving as is when I did the live presentation a few days ago. July 17, I believe it was July 21st, we saw the first piece of regulatory posturing by New York State Department, I beg your pardon, New York State Financial Division. And what they've done is they've effectively rolled out a series of legislation that is going to regulate digital currencies. This means that it's on the map. If you have to regulate it, it means there's enough business being done, there's enough potential for abuse, tax avoidance, and generally it needs to be monitored, which to me is a sign of saying it's, you know, it's come of age. Now, we're not sure yet exactly what the regulations look like, but they were released the 21st of July. I believe there's a 40-page white paper which is going to be made public on the 23rd, which is actually the day after this presentation was being recorded. But my prognosis and my opinion and view is going forward is this. This is the start of a new era in financial infrastructure. Whether you like it or not, and there's a million people that don't, that's why it's called disruption. We're going to change the way we make payments between ourselves and to third parties, and Bitcoin might not be the ultimate way that it's going to end up, but it is a precursor to the next wave of financial ecosystem. So I want to say thank you. I'm going to make it clear that everything I've said over the last 25 minutes has been my opinion, hence the disclaimer at the top of the show. I also want to make it clear that this is not meant to be a comprehensive trading guide, but it's meant to be read as an overview and a general thumbnail impression of what Bitcoin's like to trade, what you should be looking at, why you should be looking at it, and where to seek future information. I'm going to leave you with this slide here, which is one of my favorites. Good luck trading Bitcoin if that's the way you decide to go. Do your homework, follow your trading plan, and if you'd like to reach out to me for any reason whatsoever, you can follow me on Twitter or message me there at Twitter at Aidan, A-I-D-A-N-D-O-Y-L-E. Thank you very much for your time.